Right now, your bank is losing small business clients to predatory online lenders, charging them 25, 35, or even 45% interest rates. So in the next 7 minutes, we're excited to show you how you can recapture them all. Isaiah, you have a story.
Last year, we were working with an FDIC-insured community bank that wanted to grow their loan portfolio. They were facing 3 major problems. First, they needed a modern online application form, something to compete in the digital age. Second, they had a small lending team, so they needed to cut out some of the manual, repetitive work in their process, while third, not compromising on the quality of their applicant due diligence process. So, we developed a solution that solved these exact 3 problems. I'd like to introduce to you Casca, the world's first AI-powered loan origination system, with, at its heart, an AI agent we call Sarah. Let's see Sarah in action. Our journey starts with our application form. We're going to be applying as an applicant named Shelly. Shelly is looking for a $300,000 loan for some working capital and an equipment purchase. Shelly's email is shelly@gmail.com. Confirm that. And Shelly runs a dental practice called California Dental LLC. And Shelly's dental practice is based here in San Diego, 4320 Cherokee Avenue. But EIN. Shelly doesn't remember her EIN, and she doesn't have our business documents with her. I guess she'll just have to fill it out later. Churn. In a previous world, applicants like Shelly would have been completely lost. Loan officers are too busy dealing with deals that are deep in the funnel to follow up with an applicant that churned on slide 3 of the application process. But with Casca, things are different. When Shelly churns, our AI agent Sarah reaches out the moment that she leaves with messages like,
"Hi, Shelly. I saw you were struggling to fill out the section about your EIN and ownership information. You can usually find your EIN on a letter that the IRS sent you when you incorporated your business." So, Shelly replies to Sarah saying, "Hey Sarah, I don't see my EIN, but I do have my business's TIN. Does that work?" Now, you and I both know, TIN, EIN, we're talking about the same 9-digit number here. So our AI agent replies to Shelly saying this. "Sure, submitting a TIN is fine. Just make sure it's the number you file your business's taxes under. Here's the link to jump back into your application and pick up where you left off."
So, with our newfound information, Shelly clicks the link, resumes the application, fills out all of her information, and even lands in our document upload portal, uploading all of her financial documents, turning what would have been a completely lost lead into a full loan application.
How many more loans can your lending team close if they had 30 AI assistants working for them around the clock? We now know that across thousands of conversations, Sarah reliably reactivates more than half of all applicants that churn at any point in the process. For one bank, Sarah literally increased conversion rates from only 8% of applicants submitting a full application to 81%. That is huge. A step change for the industry, an order of magnitude increase in conversion rate. And we do it all for that one magical moment, where on a Monday morning, a loan officer logs in, and instead of seeing an empty loan file, they see a completed loan file here on the left, and a full audit log on the right. But why don't we have Sarah lead us through the entire loan file?
All right. California Dental LLC is a dental practice in San Diego with 12 employees. Their latest reported revenues were approximately $917,000 in 2024, growing 6% year over year. They are looking for a $300,000 SBA 7A loan to hire 2 new dentists and purchase a new CT scanner. Would you like more details on any specific aspect?
Yeah, Sarah, can you lead me through our analysis?
Okay, let's start with the basics. We've pulled a KYB report to confirm the business's filing with the Secretary of State. The deal meets the eligibility criteria under the SBA SOP. The owner's credit score is excellent at 800, And the SBSS score of 182 is strong. SBA requires a 165. All watchlist checks came back negative, so we're good here. Now the DSCR based on the 2024 tax return comes in at a 3.23, which is great.
Wait, Sarah, where did we get that DSCR? Can you explain?
Sure. Let me lead you through the underwriting. I've pulled the base net income of $263,819 off of the Schedule M1. I then performed an add-back analysis, pulling the officer's salary, depreciation, and interest expense off of the Schedule 1120S. This gets us a final adjusted net income of $374,996. To calculate the DSCR, we then subtract the annual personal debt service and divide the sum by the business's existing debt service, as well as the debt service for the new $300,000 loan. This gets us the new DSCR of 3.23.
That makes sense. I see you did a lot of calculations. How does this perform on our overall credit policy?
The deal scores a 95 out of 100 based on the business's great financials, the historically low default rates of the industry, the owner's experience and high credit score, as well as the number of employees, business age, and solid growth rate. We've done similar deals in the past few months, and other banks currently price these at 10.5% interest.
That makes sense. This looks like an amazing deal. Can you draft a term sheet and help me take it off the market?
Sure, just give me a moment.
Let's give her a moment. All right.
Casca's mission is to enable you, as a lender, to originate 10 times as many loans with 90% less manual effort. We support any loan product, from small business loans to large commercial real estate deals. And most importantly, we support you, as a lender, to recapture thousands of small businesses across America that otherwise would have fallen prey to predatory online lenders. Thank you.